Good evening, everybody. This is Johnny Seville from Acorn Wealth, and this is your executive summary for D-Day, which is stock setups for the 23rd of June. Of course, the decision day for the Brexit vote. Right now, the polls are showing a slight lead to the stay vote. Other polls suggest a leave vote, but again, who believes the polls anyway? If you want to look at the bookies, they're saying that most people are going to vote to stay, and they're giving the safe bet there. But from what I know with bookies, they're usually directing you in the wrong direction anyway. So who really knows? In fact, all the bets I've ever won in terms of sports and through bookies and horses and things like that, those fun stuff, is always on the outsider. So if we go by that rule, then we should be voting to leave. But either way, we don't want to go by the bookies odds. We want to look at the stuff that we can really measure, which is the technicals. So let's have a look at the S&P 500. Now, we talked about this over the last 3 days, that this 2100 upward channel resistance level is kind of this key pink line, I suppose, or fuchsia, is kind of holding in here. We topped out there on Monday. We topped out here today on Wednesday. The volume is drying up as we go into this resistance, so we're showing weakening volume, condensing candlestick range, and this is looking quite exciting. At the moment, it looks like a short setup. Now, I mentioned also in Trading Room last night, as well as in the executive summary, that if we have a look at the FTSE, which is an indication of the London Stock Exchange, we can see that we basically came up here. We tried to break through this downward bearish channel and didn't break through. We just kind of intraday high closed beneath it. So essentially we are still holding here ahead of the vote tomorrow. So looking good so far. To the bull side of the argument, we could have it look at HYG, sorry, the high yield bonds. And when we have a look at that, you can see we're, in this case, we're actually kind of in a potentially bullish scenario because we are in a downward channel. But again, the money flow isn't quite confident. So we've obviously got, understandably, a bit of contradiction coming in some of the indicators. So it's still a coin flip as the 50-50 odds that the polls are showing would still indicate. But again, my favor still is to the bearish side, but we've got to be prepared for anything. Open range is still bullish, so I'm still looking mostly for bullish trades. Of course, most of the trades we've been looking at recently have all been flags, fallen angels, and they have been performing terrifically. I mean, how is this one? SGY, our favorite pick from last night. What a roll that was. We looked for a break above 833 was our second entry criteria, and it opened at basically 850 and went straight up from there. I took profits on the way up as I was sending out the alerts, on the way up at basically 950, 970, and then up at $10. So beautiful trade. I hope you were able to enjoy some of that with me, but there you go. That's the kind of volatility we can get in this market. Big movement, and we'll take it. Thank you very much. Okay, of course, ADBE, it just shows why this is not a stock market, but a market of individual stocks. And of course, this is one that, despite the bullish move yesterday, we picked to buy 97.50 July puts. Those gapped down. Now we bought those I think around 250 to 275. They gapped down this morning, went straight down, ended up closing at $4.30. I sold it about midway through the day in the upper $3 range. But if you held on a bit longer, they still look good. You probably still hold those, as it looks like this is going to continue possibly down towards the $92, $93 level. But I was happy to lock those profits in and move on to some new trades. What new trades, you might say? Well, I still really like IT. I think this one looks really good. It's got a long way to potentially fall if it breaks through this support level here. And the money flow is just plummeting, like there's no floor in sight. So this one I really like, and it's got big insider selling. So this one is this ticks all the right boxes for me. I like this one a lot. And you could look at some July $100 puts. or September $100 puts if you wanted to play the options. But they are thinly traded, but the bid and the ask isn't too far apart. You just have to get the right price. But either way, this looks like a decent potential drop. Could be all the way down to around $88. My first target, however, would be looking here around $91.50. But IT, again, already in the newsletter. BG, already in the newsletter. This one looking really, really good as well. Money flow crossing back negatively today. UNP, already in the newsletter. This one's still looking good at the top side of that head and shoulder pattern. And then we've also got LL as a long. I'm in this myself as well. This one is still a valid flag to the upside. Hoping for a break on that tomorrow. I'm still in this. IMAX was again another new alert from last night. This one was beautiful. We looked at the rally up to the 23.50 area. We said we don't know exactly where it's going to hit, somewhere around there, 29.50, sorry. Ran up and hit 29.36. If you got into that today, that looks good. That looks like it's going to continue down towards that $27 target. So that looks good for a $2 drop. So those are the ones that are kind of my favorite movers today, but all of the shorts are actually looking pretty good, and all the longs have been really, really good. So, as long as you've got a good pattern, we're seeing performance anyway. So here are my favorites for tomorrow, for new potentials. Bud. How you doing there, Bud? As they say here in Canada. This is a, pardon me, head and shoulders pattern. Now we've also got the potential for for this kind of different type of resistance, but you can see it's not really connecting, so we don't have an upward channel. I don't really believe we have a sideways consolidation either. I think we're really legitimately dealing with a head and shoulder. Someone asked me today, how do you know that it's not going to break through that resistance? Well, we don't know, but if we look at this, you can see that the money flow is very divergent. The volume has gone from 1.68 million to 1.9 million to 1.4 million to today's 994,000. Volume is drying up. We're closing in the bottom half of the range. We're rejecting off resistance, much like Adobe, but Adobe closed at the top half on its final day before today's crash. And things look good across the board in this one. So for Bud, I'd look at basically some $130 July puts, which are currently at $4.40. Or of course you could look at the stock. But again, given the risk of the Brexit, I want to control my risk with options if I can, if I'm going to hold them beyond tomorrow's close. But there's one potential. BGCP also is just beautiful. It may not be ready yet. I'd prefer to see it break down below this level here, just below the... What's the low of this candle? We're looking at a low of 867, so a break of 863. If we break 863, then I think there's a pretty good shot that this is going to have about what are we dealing with, a $1.60 drop. So about 20%. I'm okay with 20%. Are you okay with 20%? But that's where I would be looking for terrible money flow, and really, really like that. Now, onto the longs, which I think are pretty awesome looking from a technical standpoint. We've got two of them. We've got KOPN. Now, let's do our analysis on KOPN by breaking through the different time frames. So let's just basically take away some of this extra noise. Actually, we'll leave the 200 on there. So you can see we're consolidating under the 200-day moving average. We're bouncing off of the support as well, and forming this kind of channel after this strong upward movement. Now, whenever I see a channel after strong upward movement, it immediately makes me want to think, is there a flag there? Like, what's going on with this momentum movement turned into oscillation? So I wanted to pull back the time frame a little bit and look at the weekly chart, and alas, there it is. I think, alas, I always think of, was it Snow White? Alas, her heart was cold and cruel. Anyway, childhood memories. So, anyway, back to, away from story time, let's talk about the charts. You can see we've got this potential flag here. Now, with a flag, we need to see where the volume kicked in. So, on May 20th, we had, or the week starting May 20th, I should say ending May 20th, we had 1.87 million shares traded. On the following week, we had 2.99. So we had a pretty significant increase in volume with that breakout through this zone, which tells us where the flag began. Okay, there we go. That's kind of our trend line breakout. So then we can measure that breakout zone, and I'm going from the bottom of this candle because you can see we got that kind of horizontal, kind of gappy type of move. So I'm being conservative, looking at that candle, then measuring an extension from the breakout zone of this resistance up, and you can see that where that takes us to is right around here, just above 280. 280 also is the horizontal breakdown zone, which used to be very strong support, and where this entire downward move stemmed from. Also, then if we connect the highs of that move, we can see that that trend line also comes into contact there at the same point. So we have all three levels of resistance right there, which is in perfect alignment with where that flag breakout should come from. So the conservative way to trade this would be to wait for a break basically of 240 and look for a rally up to 273, 277. But upon further inspection on this, so that still is one valid trade for a more conservative trader, and less likely to stop out because you're dealing with a larger time frame. But then let's go into the daily chart. Now that still confirms this. We're not going to be over, again, we're not going to be over resistance from about break of 240. Still would be the same type of target I would use for that more conservative trade. But then when I'm thinking of short-term trades, I would then go in and have a look at it as an alternative, or as well as I would look at the 15-minute chart. And we'll see here on the 15-minute chart, what do we get here? So the 15-minute chart, what pattern do we have basically from this point onwards? Anyone guessing it? That is a bump and run formation, which is a type of fallen angel, my favorite strategy. And we can see we've got nice big accumulation, good volume coming in at the end of the market, and you can see the directional movement indicator is giving us a buy signal. The 15-minute money flow is giving us a buy signal. The pattern's a strong buy, so I like it. So with the secondary potential entry, I'm looking at an entry of $2.28, so a breakthrough 228, a target of 272, so nice profit potential, but almost 20%, or more than 20%, close to. Where's my maths? Anyway, and a stop of $2.12. So a really good risk reward there. We've got 16 cents of risk for almost 50 cents of profit. So yeah, that one looks good to me. Let's go to... Oh, and by the way, with this one also, we do have insider buying as well. So whether this trade succeeds or not, it meets all of my rules. And I would trade it with either one. I like this short-term pattern because I'm going to be watching it during the day. So let's say it does rally through and then stops me out, then I'll be able to get in again because I'll be looking at the intraday trading. So if you can't do that, you may miss the trade. It may stop you out and you may not get in if it ends up going up. Or you could go for the more conservative where you wait for it to break 240 or do nothing. These are just some of the ideas for you, but I like this one. OSG... again, let's go through the process. Let's start back at the larger time frame. Let's look at the weekly chart. Okay, looking at the weekly chart and weekly money flow, what do you see from the weekly money flow? Do you see what I see? Very, very strong move here, rocketing up. Now, it hasn't been on the market long, but so what? I mean, we're really only looking for where do we have enough history to establish the pattern? Now, we've seen that the pattern on the downtrend has been broken. When that broke, it started to become very momentumish like around the bottom. If we could have a 100 moving average, it would probably be curling down over those tops of those averages. But that's just a hypothesis. But as you can see, it started to bounce off the moving averages. Now we have this this tweak up right now. So we can see that essentially our moving average on top is at 1205. Okay, so on the weekly chart, a break of 1207 would be, a continuation of this, again, fallen angel. Let's go to the daily chart. Okay, the daily chart, what do we have? The daily chart, we have a flag. We have a nice big movement here. 630,000 shares to 1.13 million. Almost double. Again, significant increase in volume. If we look at an extension of that from $12 up, that takes us to at least $13, which, surprise, surprise, is also where the next moving average is. So we've got at least $1 there of movement, which I think is excellent. So with this one, OSG, it could actually be a much longer term great bull ride. I like fallen angels even in bear markets. And let's just confirm it one more time with a 15-minute chart and see if we get 3 time frames all telling us to buy. Okay, there we go. What do you see here? Beautiful consolidation. So there we go. We've got a pennant formation forming, and we can measure that pennant formation. So a pennant formation should break out that much, and there you go. That brings us up to at least 1250. So it may not take us to our target, but what that gives us time to do is that as it rallies up to that 1250 level and such, we could take some profit if we started to see it turning around, but at the very least we can start to raise that stop loss up so that at least we don't have a loss. And that's the key thing. It's not necessarily making money is the number one primary goal. It's protecting capital. So those are my favorite trades there. And in terms of a stop loss, so I look at an entry of 1207. So once it breaks 1207, I would look at a target one of 1247, or basically look at the stop loss at that point. A secondary target of 1296, and a stop loss at 1173, which I'd want to quickly adjust up as that trade progresses tomorrow. Now, if you work during the day, I get it. All you do is check your iPhone, log into a computer, pretend that you're doing some work, whatever you have to do, at your excuse you need to step away, and just load up your brokerage account on your smartphone. Bang, there it is. And it's a click of a button to update that stop loss. If you can't do that, highly recommend looking into something like Interactive Brokers. 95% of all my day trading, all the day trading I did today, which was managing a very volatile position with 20% movements up and down, because I already knew where to look for my targets and to readjust, I just had alerts on my phone, and when the stock met that criteria, I was alerted, I logged in, I adjusted, went back to my business. That's what you can do. That's the beauty of trading on targets. So there you have it. We've got so the stop loss at 1173, and there's all the confirmation signs that you need. Okay, so once again, a bit of a longer than normal executive summary, but I certainly hope it helps. And last chance, again, if you have not already signed up with our gold trial, we have offered it for you for $9 for 1 month, so that after the Brexit tomorrow, we can take advantage of this awesome volatility. This is the last time I'm going to say it for a while, so do take advantage of that trial before it's too late. $9 for a full month for these alerts every day, and just go to acornwealthcorp.com/gold. It's wonderful to have you, and we'll see you again soon.